Welcome back to StockSmart Investing. Now we're here to fulfill two requests. One is a Discord request, the other is a patron request. Okay. Now, let's say you have a watch list, okay? Or you just really like one of the watch lists, that we have here, percent gainers. Okay. So whether it be these percent gainers, okay, or any other, watch list, and it can be one that you've created. All right. Let's just say, let's go and find one that we were just sitting on. And this is this Chende running or done arrow up high. All right. Now this running or done arrow up high means that it's either running or it's about to fall off. All right. And that goes with the probability of trading, I guess. But we spent the time to create this watch list, okay? And now we want to know when it changes. And so come into your list here and come all the way down, and you're going to go to alert when scan results change. All right? And you can choose when a symbol is added, when a symbol is removed, or both. All right? Now I'm going to go with when a symbol is added. All right? And it says, what, 10 items? All right? And you can say notify me with. All right. Now you can go play a bell sound, email, SMS, mobile. All right. So send an email to all specified email addresses. Now that's going to be what you specified in your setup. So you'll go up to your gear setup icon and you'll have to set that up in your application settings. All right. You can send push notifications to mobile devices and send text messages after U.S. market hours and during U.S. market hours. Okay. Now, once you have that filled out to your heart's content, okay, when this alert is triggered, it'll send an email and a text message. All right. Very good. So you hit create and send. Now, every time in your email, it'll look like this. Alert, 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 alert. And it will tell you Eller Simpler Decycler, Vortex 4-Way, RSI Ligare, Overbought, and LBR Smart ADX. So these are all of your signals, okay? They'll come into your alerts to your email, okay? Now from there, that's where you want your scraper to scrape the information, okay? And they'll scrape the information from the alerts, and then they can make decisions from there. So that's where we're going to continue to pick up on our GitHub project on, building our trading bot. Okay, so we'll get out of our email there. And we'll drag our OBS over to this side. Here we go. All right. So that's how we're able to create those alerts so they go to, our email. Let's just say we work, 9 to 5 or a 7 to, 9 or 7 to 5 shift. You don't have time to stare at your computer, but you do want to know when things change, or you do want to know when certain things are in your favor. Okay, let's just say, for example, I'm fond of the weekly and daily chart. So given the weekly and daily chart, all right, so we're going to do a little custom thing here. Now I've got a simple moving average plotted here on the chart. Now what is that period? That is a 55 period simple moving average. All right, so let's add another one, okay? And you could even go in and use your strategy and do a simple moving average strategy, but nah, we're just going to keep it simple in the spirit of simple. Here we go. And a 9 period. Yeah, you can make that a 10 period if you wish. Or a 4 period. Any of them. Okay. And now, we like these signals, all right? So we're going to look for where they cross. So when the fast one crosses the slow one, that's a buy signal, all right? So on HP here, that would have been around 1468. And our exit signal is when the fast crosses over the slow, which would have been at 2709 or 2734, it looks like. All right, looks like we might have got back in here around 2789, and we are still in, maybe even would have doubled down at 2845, and I mean, you're up in profit, so there's no need to sell, and there's a Darvis explosion, so we're going up in price, bullish on the HA cult, and pointing up in direction on the shaft trend cycle. So this HP on the daily looks good, good, good. So that means we would come down to the 4-hour chart. All right, now answering the other question, someone who doesn't want to spend all of their time staring at the charts, they would use maybe this moving average setup if they're just going to buy and hold. Okay, so they would use this very simple moving average setup here, all right, to get in and out of their trades. Now, you would look for a low, all right, and once a low has identified itself, you can figure there's going to be a lot of buying and selling going on, all right? But wait until you get your signal, and it happens right in here, all right? So the proper way to say maybe trade this is, here we can see the Darvis box has our bottom support. It shows us where it's at. But we wait for the crossover, and we see that here, and we buy the first pullback, all right? So we get our crossover. We get our first pullback here. That's where we would typically buy in at. And then now we can ride the wave knowing that we made a good decision. All right, now let's pull up another example here. We'll go to eBay and see what that one looks like. All right. There we go. All right. Oh, don't do that. Back up. There we go. Why does it keep wanting to do it like that? Alright, I'll just change the time frame and then go back. Why, thank you. Okay. Now, here we go. Now, here's our crossover here. Alright, this is our entry signal. And you see we get a little breakout, fake out right there when it happens. So they know that's a signal that people look for. Alright, so we would have, and this is why this candle is so big, because they know people are entering on this candle. So if they can trap them up here, they know they've got them, and they're likely to sell out. Alright, so if you get in and get a low on, say, a pullback, like here, all right, now you can ride your trend all the way up, and we don't cross over, so we stay in. All right, and now, ride it all the way up to a peak, and we can see, here, somewhere in this consolidation, we might sell out. But this is where we get validated out, and this is where you would truly say, okay, I've had enough, time to reverse my position, which comes into another thought. Now you've got reverse your position, and you've got reverse your position now. Okay, now if you hit reverse your position, it's still going to pop up with the order window down below and say, confirm, da-da-da. But if you hit reverse now, that means, no going back, reverse it. All right, which would sell the shares you have and then go, the opposite direction. So in this case, if we were long, we would be short. All right, at this particular candle. All right, and we would not buy those shares back either until maybe we saw a bottom like this, or until we finally had a crossover right here. All right, we would buy those shares back or reverse our position again, hence going long. So on our first set, let's say we had 50 shares. Okay, going up, we would reverse our position, and then we would go long, or short those 50 shares. Then we would switch it, and we'd go long, and then we'd be long 50 shares, or you could even add to them, go long 100 shares. Either way. All right. So we're understanding the basics of the moving average over the 4-hour time chart. Now, when we start to see these interferences here, these crossings up and down, and they're just, now this is consolidation. That's why I use this big Darvis box here, so I can tell where the highs and the lows are, and whether it's consolidating or if it's moving. And drawing a trend line always helps too. The trend line never hurt anybody. And as you can see, we've got just nearly a nice little say ascending wedge here that kind of turns into a pennant, okay? And then we have our breakout once it breaks above this resistance, and it did. Okay, let's find another example. Okay, here's a good example of crossover being a good entry and exit. All right, where do we get our entry? So it looks like our entry happens down here at the $3 level on the 4-hour time chart, 180 day. All right, so you would get your entry here at this $3.12 level, and you would stay in all the way through this high up to the 590s, and you could take the high as, okay, I'm out, I'm done, it showed its high, it's not going any higher, and most experienced traders would. But you may say, hey, it's going to make another new high, because highs that make new highs. So you might wait until you're validated out, which happens here. And when you are validated out, look what else caught it. This sell signal also caught it as well. So you were validated out by a Darvis down signal, a TTM down signal, and then a simple moving average crossover downwards signal to go short. Okay, you would have gone short. It would have been a winning trade. Still short, still short, still short, still short. And now people are starting to buy back in the bottom. They bought back at this crossover, which caused this big pop here. Okay. Now this is all probably mostly, retail in here playing around, but no signals, no signals, no signals. Okay. Look here. This is a lot of noise, but now we're getting a crossover and an upward signal. And our shaft, actually went bullish way back here. So, this was a trade that you could have taken once price closed above the moving average. Okay, which you could consider this 10 period to be the directional moving average. Okay, your directional SMA line. All right. So for a 180-day chart, that's how I would simply keep track of that. Now, I also like to watch the Kapok on the weekly and on the daily, because they like to show things that have recently had a low, all right? And it seems to have spiked up. It did. And our indicator caught it. And of course, we could have been alerted, had we had the alerts. All right. You would have been alerted to your email to take a look. And it looks like we got the crossover somewhere around even this signal here, which is one that we scanned for. This is a Darvis breakout at $1.60. And we still had a day and a half to catch it within a decent range before it shot up to this $2.50 range, $2.82. Okay, and we got CNST on the Kapok day for the true, and it really blew up too. It blew up from $20 all the way up to $33, and it's created a base at this $33 level, so price has to run to catch up to it. It is most certainly going to be bullish tomorrow. And it looks like the bid and ask is already still, they're already, you know, what do they got, a 22-cent spread on it already? Excellent. So CNST will be one to watch for tomorrow, and this GTT. All right. Now let's go back and check that KAPOC on the weekly, because those are important signals too. And it looks like, oh goodness, so many of them. All right, so what this is telling me, and I said this earlier, was that we are about to see the reversal in the market. And I was starting to see it within the moving averages if you check out your 50-period moving average on the daily charts, all right? You can see that my strategies work because the P&L is a nice big green, you know, steadily inclining. Yeah, you see it there. So these strategies work here, all right? Now make sure you subscribe so you can get those alerts and access to those alerts and these homemade studies that I make and build and share too. So looks like we are getting that moving average breakout, or we're trying to see that. It still might get rejected, but you know, we did get a buy signal down here at 25.44 on BBBY. So we could have caught that one before it made its move as well on the daily chart. So even on the daily setting, you can still get a good move. It doesn't have to be on the 4-hour, okay? It just depends on whether you're swing trading or whether you are day trading. If you are swing trading, you should be taking your signals on the weekly, daily, and 4-hour. And I would say at the very least the 1-hour, you know, time frames. I wouldn't recommend. And see this fake out breakout signal, I see these all over the place, and those are ones that I really need to scan for because half of them are wrong. Okay, half of them are huge explosions. Yeah, then we see this HA Colt and shaft indicator, you know, when this shaft goes up and over like this big steady arch real quick, we know that that's a big fast move, as opposed to let me show another move that these are common for making. It's more of a wave. And let's not get too far off of subject here. But there we go. You know, and you know, your 1-hour chart is really going to be more for people looking for short-term trades. You know, you're going to trade week to week or bi-weekly, say with this 1-hour and below chart. So the 1-hour and say the 10-day, 30-minute chart, you may pick a week-long or 2-week-long swing trade with this. You know, once you found a low that has exposed itself. As you can see, it took a little bit of time before you were able to see that it really made its move. All right, now Azul is one that has showed up all over my watch lists. Let's check this out. We see this big dip happen, and here's the other way that they go. You know, they shoot straight up, not just at an angle, but straight up. Okay, and you see it's something like this that's happened. All right, and we get our crossover as an entry. And then when we get rejected here at this top line, that would be a good exit signal. Okay, you might take your profit here. You might not wait to lose money on that trade. Okay. You know, or you could buy here, you know, reverse position, which would have caused this big spike, or the people which caused this big spike is everyone who shorted this stock from here, they bought it back here. Okay, causing this big spike. All right, they probably shorted it again. Okay, reversed their positions, caused another spike. Okay, bought back in. All right, now there's this little climb up. All right, there we go, very good. But this really is consolidation and or accumulation. Okay. Let's see, Gato. Let's check that cat out. All right, and it looks like this cat started running here at this Darvis signal. Then we got the moving average crossover. Okay, then we would have looked for the first pullback. Okay, here was our first pullback, because had you bought in, you pulled back, you would have been scared out, or you would have been stop-lossed out. Okay, or maybe you wouldn't have been scared at all because you knew it didn't go below the Darvis box breakout line right here. Okay, very good. But we would have looked for the first pullback and bought it. You might have bought here. You know, this says you would have bought somewhere in here. Okay. Well, you could have taken that to $17, but really we would still be in. Now you can follow these signals down here too for this shaft trend cycle. You know, buying when this goes up and then selling when it falls. Yeah, this was a good signal here. Big healthy run. All right. What else is on our list here? Let's see. PLIN. And these are Kapok on the weeklies. Interesting. Let's just pull up the Kapok plot. Interesting. It's giving a buy signal there, and it's giving a big buy signal there. And we need to find the regular Kapok plot. Kapok day plot, Kapok lower. Get rid of that one. Okay. I see what's going on here. We did just come above this 0 line. So when we started coming back up ever since 510, that's when price started to increase. So when the Kapok hits a bottom and starts to come up, you know, it's gonna curve, you know, and do what Kapok curves do. Okay. Very good. Now, let's check out our Darvis box breakouts, see if we can find anything here on the daily. It looks like Skills and Clove. Now, Clove I was talking about earlier, and I plucked it right out. And said that it was, looks like it had finally hit its low and was turning around. And it looks like Skills is having an interesting time. Of course, they've been in, you know, they've been buy ever since back here at 1486. Okay. Had I done more investigating on Skills, I would have seen that. All right. And it looks like even a buy on the 4-hour chart as well. And here is our fake out breakout, which was, you know, never happened. And then big bull flag. So, you know, this, and we even caught it here with our signal and the Darvis breakout signal. It caught it. Wonderful. Alright, and it looks like we're consolidating a little bit here on Skills. Although the last signal was a buy. And let's see, it looks like we did get a moving average crossover to bullish. So this would have been a good entry at 2104. Okay. Now we can make a strategy where our simple moving average crosses, or just use the standard, you know, crossover strategy that Thinkorswim has. But on our two particulars for tomorrow, they are Clove and Skills. Even though they've already had these huge run-ups, it looks like Skills is, or Clove is in a pullback on the 5-minute. But on the 1 minute, it's overextended. It's just hit a high, so 5 minutes of pullback, this is overextended. I expect the price to drop first thing, market open, but it looks like it has created a bottom here at 969. Now let's check out the TPO there and see if it actually has any support or if it is just a pump and dump. Alright, and we can even pull out our pump and dump detector, which was a giveaway. Now let's hit 500 subs and we'll give out the next one. Alright, and it looks like, yes, we are being pumped and dumped. So this pump and dump detector detects big moves that, and then when they fall off. Alright, so you can keep up with them while they're moving, and then you can keep up with them while they're falling off. Okay? Very important. So you take a look, and this scan does find the pumps and the dumps, whether it's in Clove, whether it's in Skills, whether it's in, say, GME, any stock, it'll find, if it's being pumped up. All right? So it does work. And it lets you know when it's about to dump off, too. As you see, it starts to dump off, gets flat, tells you, get out. All right? Well, you buy back in, you take the next run, and then boom. You run with it, let your runners run, and then, it's starting to fall off. Then we get our sell signal, and we know it's no longer valid, it's being dumped. So you should reverse your position. Okay, so if you reverse your position, you'll have to wait for your order window to pop up. If you reverse now, then it just automatically sends it. Okay, but you wouldn't have gotten the signal to get out of your position or reverse until your moving average crossover here. All right, and that's pretty late. You lost a big chunk of your profit from there. All right, but had you reversed your position, now you've used that to make more profit. Excellent. All right, and it looks like with the moving average crossover happening, the people who will have went short will be starting to cover. All right. Now, speaking of covering shorts, let's go jump over to AMC. All right, and see how they're looking, because I know they're not looking to cover any shorts, but they are in a pump and dump cycle. Okay, so be careful. All right, it is catching it. So, every one of the big, the big moves up. See it here, they caught the $72, dollar move, and then ever since then, it fell off in price. All right, so we can use this pump and dump detector to catch the pumps and the dumps. So make sure you subscribe. I like to go live and, check out the stocks and, trade alongside of them. And as per the Renko bars, we were checking to see if something had any actual support behind it with the TPO, but that's probably not relevant right now with, the Reddit crowd moving everything. Everything is just so far above the TPO, and really we're looking for something to be well below the TPO. If we can find something that's well below the TPO, then we know it's going to blow up in price. That is how I was able to find VTNR 2 days before anyone else did. I also was on AMC, way before anyone else found that. And, I mean, there's the verification in the older videos. If you go back and watch them, please consider doing that. You'd really help the channel out. Okay, here. And let's check out something on this list here. Let's see if anything's going to pop up. And we will get rid of the TPO, but we are going to pull up Renko bars, okay? Now, the idea behind the Renko bars is to get rid of all of this noise. So, for the person asking about, let's just say, the 4-hour, 180-day chart, and, attributing Renko bars to, the Renko bars are interesting because they don't take time into account, okay? So this entire chart here that might even be 180 days with skills, if I put it into a 25 tick range, You know, I can put back 25 ticks to 180 days, but it still might, you know, it might show me 180 days and 25 ticks, but the prices, yeah, it's an interesting thing here. Let's see if we can zoom out so I can make more sense of it. All right. You know, it will show you, all right, here we go. So we've got a 5-day 25 tick, all right, and that gives us a low of 1570, all right. Now let's go in and look at our 5-day, you know, 5-minute, and let's see what the low is there. That's 1566, okay. But it isn't taking volume and buying and selling pressure into account, you know, and apparently I guess it didn't used to take time into account, but I guess it does now. Yeah, or maybe they're only taking into consideration price and time. You know, but it could be, you know, let's just say you set it up on a 100 tick. It will take, you know, forever for it to move, you know, a 100 or a 1000 tick. So you'll see that you only get these, you know, types of movements, a very small chart. Okay, but if you trade off of a 100 tick chart and something has hit its low, okay, so you find something that's hit its new low and it's finally reversed. Now you can trade a 100 tick chart, buy in, and know that as long as it's going up on green bricks, you're in good shape, and you sell out on your red brick. All right, let's change this back over to a 25 tick. All right. Now the way we would consider trading this is using our simple moving average, and the first green brick to clear above, let's say this one, that's our entry. So our entry was 1745, and we wrote it up. We didn't get an exit, it didn't go below it, and we got our confirmation, or well, this is our validation out. You know, your confirmation that you should be selling. So you're validated out at 21.95. All right, and that's the first brick to close below your simple moving average. And that's a 10-period simple moving average, I think, is what we have there. Then, of course, here is your fast move or your slow moving average. You know, that's what, a 50, 55 period? Yeah. All right, and it hasn't gotten to plot much because it's only 5 days, so there isn't anything for it to plot. There'd have to be, you know, more. So let's go about to 30 days and see how the 50 period looks. All right. Now we can go with the crossovers of your moving average here, whether the bricks close above and below, and whether your crossover is true or false as well. Okay. Fun stuff. So if it seems complicated, it kind of is at first, but it's really not that complicated. Now here we see our low here. Our low is exposed. And then we buy, say, the second or third brick, and Darvis box gives us an upward signal as well, so that's another indication to get in. Third brick, so that's a buy-in at 1345. Okay, and we can reverse now our position here. Okay. Push it back down, reverse our position here. All right, and, you know, essentially, if you can day trade or you're using a cash account, you're perfectly fine. If you're above pattern day trader rule, you're perfectly fine to do that. Do not reverse your position if you're on a margin account. You'll waste all your day trades. All right. So it looks like this watch list isn't going to work for us today, but I think thank you for watching, and consider subscribing. Hit the like button. That helped me out an awful lot. And I'll see you in the